Hello everyone, welcome to today's session on goods and service tax filings. So today we are going to see what is output tax liability and how it is computed in GSTR 3B. So before we proceed, let us quickly see what we did in our previous session. So in our previous session, we learned about the structure and format of GSTR 3B. We took an overview of all the different tables that are there in the GSTR 3B and what data is required to be filled up in each table. So let us proceed with today's topic. So in this session, we are going to learn about what is output tax liability, what are the factors that affect the output tax liability, and why is it important. So let us proceed. What is output tax liability? Output tax liability is a tax which is calculated on outward supplies of goods or services. Output tax liability includes IGST, CGST, SGST or UTGST and cess if applicable. Output tax liability is also calculated on advances received against services. Debit note, credit note adjustments for any change in output tax liability must be done before ascertaining the final output liability. Then output tax liability is reported in GSTR 3B return. So let us discuss each. Output tax liability is a tax which is calculated on outward supplies of goods or services. So whatever goods or services we have supplied during the reporting period has to be declared in the GSTR 3B return and corresponding taxes is required to be paid. So if I am a trader of construction materials like aggregates, iron rods or cement, then after the conclusion of the month, I have to report the total sale of these products in my GST return and I have to pay GST on each product which carry different rate of GST. So next, output tax liability includes IGST, CGST, SGST or UTGST and cess. So if I have made the supplies within my state, then it will include CGST and SGST or UTGST. But if I have made the supply out of my state, then it will attract IGST. There are some products which along with the taxes attract certain cess. For example, coal. Coal attracts cess along with the GST. Next, output tax liability is also calculated on advance received against services. So in case of services, GST has to be paid on receipt basis on value exceeding rupees 2 lakhs. So any advances against services to be provisioned must be considered in the GST return and taxes has to be paid on such advances. Then debit note, credit note adjustments. So before ascertaining the final GST amount for the reporting period, the adjustment of debit notes and credit notes must be taken into account. So debit note will ultimately increase the tax amount, whereas credit note will ultimately decrease the tax amount. Then output tax is declared in GSTR 3B return. So the final assessment of tax is done in GSTR 3B and the payment is also done in GSTR 3B return. Next, type of supplies affecting output tax. So although all the supplies executed during the reporting period has to be declared in GSTR 3B return, but all the supplies made during the month does not affect the output tax liabilities. Say the taxable supplies, that is B2B supplies or B2C supplies, then interstate or intrastate supplies of goods or services that attract certain GST rates do affect the output tax liability. But supplies like exempt or nil rated supplies are disclosed in the GSTR 3B return, but they does not affect the ultimate tax liability. Also, like nil rated or non-GST supplies, alcohol, petroleum, etc., such supplies does not affect the ultimate output tax liability. Then formula to compute output tax liability. So how output tax liability is computed in GSTR 3B return? Let us see. So the final output liability will be the sum of tax on outward supplies, that is GST on the goods and services supplied during the reporting period, and tax on advances received, that is in case of services GST is to be paid on advance receipts also, and tax on debit notes, that is if the seller has charged less from the buyer or has charged at GST rates lower than what should have been charged. Then it will be the sum of these less the tax on credit notes, that is in case of any sales return there will be a credit note, and RCM taxes paid, that is taxes paid under the reverse charge mechanism. So the final output tax liability will be tax on outward supplies plus tax on advance received plus tax on debit notes minus tax on credit notes minus RCM taxes paid. So what are the steps to compute output tax liability? So first we have to identify the taxable outward supplies and non-taxable outward supplies. Then based on the HSN and description of goods, we have to apply the correct GST rates on the taxable outward supplies during the reporting period. Then we have to add tax on advances. So if we are into services, then GST on advance has to be paid in case the advance amount exceeds rupees 2 lakhs. So we have to add the tax on advances also. Then we have to adjust the debit notes and credit notes issued during the reporting period. So any debit note issued for any reason that will increase the taxable value and tax liability of the seller, and the credit notes issued during the period which will ultimately decrease the or reduce the taxable value, and final tax amount shall be adjusted from the total taxes that has been calculated so far. Then we have to bifurcate the IGST, CGST and SGST correctly in the GSTR 3B return. So let us understand how output tax liability is computed with the help of an example. So intra-state sale of goods rupees 1 lakh at the rate 18%, interstate services provisioning rupees 50,000 at the rate of 12%, and advance received rupees 10,000 at the rate of 18%. So the output tax liability will be calculated as on intra-state sale of goods of rupees 1 lakh, 18% will be divided into two parts, that is 9% and 9%, and will be charged under CGST and SGST. So CGST tax will be 9,000 and SGST tax will be 9,000. Then interstate provisioning of services rupees 50,000 at the rate 12%. So since this is an interstate transaction, IGST will be charged. So 12% of rupees 50,000, that is rupees 6,000, will go under the IGST liability. Then advance received rupees 10,000 at the rate 18%. So advance IGST will be 10,000 at the rate of 18%, that is rupees 1,800. So up to this point, the ultimate tax liability will be CGST rupees 9,000 and SGST rupees 9,000, and IGST will be 6,000 plus 1,800, that is 7,800 rupees. So to keep this example simple, we have taken advance received rupees 10,000 at the rate of 18%, and we have calculated the IGST amount rupees 1,800, that is 10,000 into 18%. But in real life scenario, if advance is received say rupees 1 lakh and no GST has been received against such advance, then the advance amount shall be considered inclusive of GST, that is receipt of rupees 1 lakh shall be considered inclusive of GST. So we have to do the backward calculation and we have to ascertain the taxable value and GST on such advances. So moving ahead with the same example, let us make some more adjustments. Debit note rupees 5,000 at the rate of 18% and credit note issued rupees 2,000 at the rate of 18%. So debit note will ultimately increase the tax liability, whereas credit note will reduce the tax liability. So the output tax liability will be rupees 26,340. How come? So 9,000 towards CGST, 9,000 towards SGST, then 6,000 plus 1,800 towards IGST, and 900 rupees debit note and 360 rupees will be reduced towards the credit note. So the ultimate tax liability will be 26,340. So what are the special considerations? So before discharging the final output tax liability, certain factors must be kept in mind, like advance payment are taxed at the time of receipt. So in case of goods, there are no GST liability in case of advance against goods, whereas in case of supply of services, advance attracts GST. Then time of supply is a crucial factor to determine the taxability. So time of supply in case of goods and services are different under GST. For example, the time of supply for goods will be the earlier of the date on which invoice is issued by the supplier or the date of payment received by the supplier, whichever is earlier, or where the invoice has not been raised within the prescribed time limit, then the date of provision of services or the receipt of payment, whichever is earlier, shall be the time of supply. Similarly, in case of goods, the time of supply will be the date of issue of invoice by the supplier or the last date on which he is required to issue the invoice as per section 31, or the date on which the supplier receives the payment with respect to such supply, whichever is earlier shall be the time of supply in case of goods. Next, debit notes and credit notes must reflect in the return. So any credit of credit note or any increase in tax due to debit notes must be there in the GSTR 1 return. Then RCM liability is a separate liability and to be discharged separately. So liability under the reverse charge mechanism must be discharged separately and its input shall be claimed separately in GSTR 3B return. Then what are the common mistakes to avoid while filing GSTR 3B return? Wrong GST rates, it leads to increase or decrease in tax, that too mismatch in tax amount. Then missing advance tax if in case of services taxes, that is GST on advance, is not considered, then there will be underpayment of GST liability. Then late credit note adjustment, this will increase the tax liability for the reporting period. Then IGST, CGST, SGST confusion. The place of supply rule must be properly followed and understood so as to charge CGST, SGST, IGST correctly. Then mismatch in returns, that is mismatch between GSTR 1 return and 3B return, must be avoided so as to avoid the departmental notices and penalties. So to conclude, so the final outcome of GSTR 3B return is discharge of GST tax liability. Hence, output tax forms the basis of GSTR 3B return. Then GST must be accurately calculated and reported in the return so as to avoid departmental notices, penalties, interest, late fee, etc. And one must be updated with the correct rates and classification of goods and services so that there are no disputes related to GST charged in the invoices. So that's it for today's session. Thank you.